Hello guys, so we're going to look at demand and supply, high quality demand and supply zones and how to identify the zones. So here are the things that you should look at whenever you're looking at such a levels. You can be looking, let's say that you're looking forward maybe for bearish market structure, and maybe you want to identify a supply zone, or maybe your bias is that you're looking for a bullish, you needed to see a bullish market structure. So of course, you'll be looking for a demand zone. So these are the things you need to see. On your zone of interest, you need to see at least this what you call indecisive candles, candles that their behavior, the character of these candles, as you can see here, the body of the candles compared with the wick is less than 50% of the whole candle. As you can see, we have bigger wicks than the body of the candles here. These are what we call the indecisive candles, almost looking like indecisional candles. So once you see this, these are the what we call the market balance, whereby we're creating something almost like a range, market not breaking to the upside or to the downside, hence creating what we call a market balanced. Don't get confused with the market imbalance, which is the fair value gap. These are different one. So this is what we want to see, at least the market lacking volume and slowing down. And on my second chart here, as you can see, this is what we call decisive candles. Candles that at least 50% of the body of the whole candle, at least 50% or a little bit more, as we can see here. Body of the candle is at least 50%, slightly above 50 of the whole candle. But as you can see, it's almost looking like an indecisive candle here. So these are the things that you need to see. And probably on your zone of interest, again, you need to see what we call explosive candles. These are the candles, as you can see, candles with the high momentum. These are the things you need to see. So whenever you're picking a zone, don't pick a zone that has just one candle, but at least you have to see this behavior around that zone. And what is the reason of looking for this behavior is because we want to pick zones that have institutional activities, zones that have high price action, because when you pick just any random zone, you might end up picking a level of low quality. So whenever you have these zones and market has this type of characters, most of the time, even if you're on the wrong side, the market's going to react on that zone, and probably you might close at break even. So let's look at this other chart above here. As you can see here, so allow me to get rid of this and this and this. So if we look at this zone, if you're looking at a demand zone, at least before you don't just come here and pick this zone as your demand. At least make sure that around that zone of interest, you can see, you can tell that this area was lacking volume initially before an explosive came in, because you can see this one is an explosive candle pushing away from the zone, and probably now this can be your area of interest first. Remember, the area of interest, I'll come with the next video to show you how you find the zone. But this will be a zone of interest that if the market pushes back in the zone, there's a way you'll go to your lower time frame. And again, we'll look at how we can refine these zones on the lower time frame and expect price to push higher. So if you're looking at a place to look for short position, again, you just want to see, at least look at this. This one is a decisive candle. This look like indecisive candle, decisive candle, then explosive candle. At least this can show you that this area has institutional activities. Another zone that we can look at is this, this particular area. We want to look at a zone that has decisive, indecisive, and explosive candles. So you need all these things together. Then you can tell that, okay, if I see a bigger candle pushing away from the zone, then automatically, this is my what? This is my zone of interest, because it's a zone that you can see some institutional activities. And if you're looking for a supply zone or a demand zone, this zone is going to be of high probability in your setup, right? This zone is going to be of high probability on your setup. Another thing that I've noticed when I was doing the back testing, is that you need to see, let me get rid of this watermark. You get to see you don't use this fixed time frame, because there's something that I noticed about this free, most of us are using the trading view, and there's some specific times these people have given us, and I think sometimes the system is made to make you fail, because why is this time frame here fixed for you? It's a free time frame that you can use, like we start with the 12-month, 6-month, 3-month, monthly, we got weekly, daily, 4 hours, 3 hours, 2 hours, 4 hours, 45 minutes, 30 minutes, 15 minutes, 5 minutes, 3 minutes, and 1 minute. How comes if you need something like 72 hours, right? Let's say that you're looking for something like 72 hours, you can see you'll not be able to get it, because there are some zones that you can't see them. Something like 36 hours, you can't get to see this. So this specific time frame for me, I think at some point they're not good. And let me show you the best area you can look at these zones, following the same rules and using the same time frame. Okay, let's come here. If you look at this is our website, and let me just close it and open it again so that you get to see this. Most of the time, whenever you're analyzing the chart, try to compare your demand zone with this other chart here. So it's gonna take a minute to cancel and reopen a new website. So hold on a minute. So let's see what we do here. Click here on this new tab. And on this new tab, I'm looking forward to open a different website that allows me to flex my timeframes to the timeframes of my choice, so that if you're looking at a zone, actually you can compare. Because what I came to notice that if you're looking at a demand zone on 4 hours, 2 hours, 3 hours, sometime these levels, you can't see them on a higher time frame. And to make sure that a high quality zone, that zone must originate from a lower time frame. Whatever zone you're looking at must originate from a higher time frame. If you are having your demand zone on 4 hours, this demand is not originating from a bigger time frame. That demand zone has a low probability or more chances, almost 9.9%, 99.9% chances of that level being violated. So whenever you're looking at that zone, make sure that you're getting that zone from a bigger time frame. And that's why I'm kind of feeling like eliminating these zones that we see on 4 hours daily. If we keep using these levels and we can't like get to project or see these levels from a higher time frame, then we are not going to be able to see them. So come to gocharting.com, tap on backtesting here. When it load up, click here on products. You'll see the charts. Click on charts. And again, this is another website you can use to backtest if you want to backtest the strategy or this particular topic you are covering today. Demand and supply, you can always come here and do your back testing, and it's going to help you a lot, because you're going to see some things that maybe you're not seeing. All these things that pop up on the screen, just dismiss, and since it's a free website, it will keep bringing up the ads, and so that's just part of free things. So let's look at this. You can see this is the what time frame is this? This 3 minutes. And I don't know which page is this, but let me go to the common pairs that most of us like using. Let me go to like G2P card. And on this platform, feel so good and comfortable when I use Pepperstone. I don't know why. Let me see if there's another broker. First, let me see the data I can get from Pepperstone. And we go to a bigger time frame, monthly time frame. Pepperstone can give me data up to 2008. We look at GP card with the Oanda. This one to see where am I getting. So here we don't have, oh, we have Oanda, right? You see Oanda, at least Oanda looks more better and clear. So if we look at this market structure, we are here. So remember the rules we have talked about on the previous where we started, that you need to see at least decisive candles, indecisive candles, and how do you call this? Explosive candles. And most of the time, whenever you're looking at the zone, so the trick is here. For example, if this pair is pushing higher, there's a level that if I want to sell this pair, where do I want to sell it? I can look at it. I'll just put a straight line here. This I have the zone. And I'll follow this line to the left. And when I reach here, you can see around this zone here, we get to see something. What are we seeing here? Get to see something here. You can see what I get to see. I can see some indecisive candles, decisive candles, then explosive candles here. What does it tell me? I get to see that there's an institutional activity here. And if I want to trade, I can pick this candle and this high as my area of interest, and I'll be interested to look at this one keenly if I want to trade. But one fun thing is that this level has already been, you see, this area has been already been used. So what does it mean? I'll need to follow this chart. I need to follow this chart until I can find a zone that has not been used. For example, if we follow from the left, you see this is an area that has already been mitigated. And the only area that is left with the high probability, if I follow back, then I can see around here, indecisive. You see this one is an explosive, indecisive candles, indecisive candle. This is almost looking like a decisive candle, but you can see the body is less than 50%. This one is also, we can call it indecisive as well. Then this is an explosive candle because it's breaking away from the zone. And again here, and you see market keep breaking away from that level. So what does it mean? Automatically say that here, to me, this is another POI, point of interest, that I can be looking at from this particular time frame. This looks like another zone of interest. So this means that if the market is going to push higher, there's something that we'll always expect, that the price will hit this zone because this is a high time frame, valuable zone, high quality zone. Again, the market might react to push the price lower before just going through the zone and hitting that zone above there, because this is a high probability zone that has not been used. And again, if you want to see on the left what happened, if you want to see, let's see, I want to see how is the market pushing higher. What you need to see, just put your horizontal line around here and follow that line to the left. You're gonna see the same rules. You just need to see that. Don't let's skip the zones or cut through the candles. So the problem is that I can't see on the left because of this pair has been pushing lower, but always there's something on the left. Now, if we look at this pair here, if you look at this pair, it's been pushing higher. You can see where you have these zones, these areas. If you look here, they have an impact on the market structure. So all these zones here have been used, and you can see from this high, for example, because this market has been pushing lower, and this is my first area of interest. If I want to see the other zone, I'll just put the line above here, and I'll follow the line to the left, and you can see I'm seeing something again around here. So let me remove the line and zoom in here. Zoom in here. What do we get to see? We can see a drop. This is like a base or something. So this one is an explosive candle, indecisive, then an explosive candle. Automatically, if we mark from this low to this high, you can see this one has already been tapped, has already been used. So what do? You can decide to refine it and go with the zone that has not been tapped here. And again, as well, this can be our POI, that if the price comes back into this zone, I'm interested to sell from it. So let's see what happened. You can see initially price already hit this zone. Back, if we look back on the left, already we hit this zone. We have used this zone and we are now pushing away from the zone. And since the market is trying to push higher, it's likely to return to this zone that is unmitigated before pushing to the downside. So that is in terms of the location of a demand zone. And if I want to look at my other zone, what do? I just follow this market. For example, I just chase this. This is another zone. If I go higher, around here, I get to see something. What is this? This is a rally to the upside. This one is call this. What is this? What is that? Just a minute. So if we follow this market up to here, we can see some decisive, indecisive, then these are just explosive candles, market running away from the zone. So automatically again, we can see some explosive candles, which is a sign of institutional activities. And if you want to mark our POI, you can see this can be our POI area, point of interest. And we can see that if I want to see anything else, I should not go through the candles. I just follow the move. I mark the high of that zone and I look on the left. What do you see here? Around this zone, what we get to see is that we remove this first. We can see that here we have indecisive. This one is a decisive. This looking like an explosive candle here. Look at explosive and the price went away to the downside. So what are we gonna say here? We have some institutional activities here. And right here, what I can look at, what I think that is here, a zone with the high probability is this. Let me use this box, this area, like that. And this area has already been mitigated. So it's already used up. So you can see that if you're looking at a zone, I'm sure if you rewatch this video again, you're going to notice something. This was on a bearish market structure. So let us look at something like the USD CHF, which it's been bullish for a while right now. And let's see what is there. Okay. So, okay, USD CHF. Okay, this is a bigger time frame. Let me now switch from a bigger time frame. Let me go to like weekly. Weekly time frame. We can see when you look at the weekly time frame, what do we get to see here? The same market that has been pushing lower and above, it has the same things. For example, this market has been pushing higher. All right, the other one I was explaining the supply zones. Here we can see the price is pushing higher. If the market it's pushing to the upside, how do you look at a zone? For example, I'll start from here. Look at where this market is. You can see if we look here and we put just our line on this law of this market structure. If we follow this level on the left, we are going to find something similar to what we've been talking about. Price just sweeping this zone here, nothing clean. Nothing is clean here. So if nothing is clean here, I'll do this and I go to my left. And you can see when you come to your left, you're going to come across whereby the market pushing lower, then around this zone, we can see indecisive. Then so I'll just pick this as the level of interest. An institutional zone, right? Price will hit this level and go higher. You can see hitting this level and pushing to the upside. And Again, probably the market, when it was, the market is attempting to return to this particular zone here. So if it's returning to this particular zone here, what is happening? For you to be able to see that, you can always use a higher zone on the market structure. For example, let me pick this the highest point here. I want to follow something. I'm going to explain it just a minute. Look at this. If this was the highest point on the market structure, you can see what is this here. We can see the price has been pushing away from the zone like that. And let me use what we call, I'm using the weekly time frame. So there's something I want to explain about this drop, the downside. But what we can see from this particular drop here is that if this market as it has been going to the downside, this is a zone that we have some indecisive candles, indecisive, then explosive. Automatically, we can say here and here is our institutional activities zones, bigger zones, so that they are just like your POI. But when the market comes there, you can go to your lower time frame and refine. So these are an area of, on a monthly, I think this is a weekly time frame that it has not been used. And it's a zone that if we get to price hits here, we expect the market to go down. Look at this zone again. Price was pushing lower, went back here. There's some, these are smaller zones that we might not get to see them clearly, but if we cut this chart and we look into that is less than the weekly, we are likely again to get to arrive at the same point, and we'll get to see these areas making sense. So when I look at this area here, according to this pair, that we have a POI, a level that can be used, that if the price keep insisting to go higher according to the weekly time frame, then that's the one zone that we see on a bigger time frame, on the weekly time frame. But let's look at this same zone here. Do we have another zone that if the market, because you can see all of this is just liquidity that has to be cleared. But do we have anything here? We can narrow down to like 36 hours. This where you enjoy the most, because you can choose the time frame you want. Let me first use 117 for continuation of this. Okay, we're back. We're good. So let's proceed. So 72 hours, you can see this was the first zone that we're looking at as an area to wait for the price to hit this level. Then you can be looking for short position. But you can see in this leg, if we look at it, for example, let me where it is. This is where the market is here. You can see if this market is here, if you want to find the highest time frame supply zone, just put your line there. Like you can have your line there, then follow that line on the left and see if you can be able to hit a zone that has a higher probability. But this concept will only be useful once you're aware of the liquidity levels. You see you can have these zones here, and this zone you can see it happen to push the price away. This was a zone that was of high quality. Price hits that level and went to the downside. So let's see. Around here, I don't see anything useful except if I follow, I can see something here. So of course, at some point, I'll expect this market to react from probably this zone, because as you can see, this also is another zone that has pushed the price away. And see, this is a zone that has pushed the price away. It is the zone that has pushed the price away. You can see some indecisive, then explosive to the downside. So these are zones that if, let me go to a bigger time frame, to the daily, and look at that zone again from daily time frame, show you those are the areas that have higher probability that even if you are wrong and price gets to hit those zones, you're likely to get filled your orders. And if your orders catches it, you're going to even if you are wrong, you're going to get a good reaction from the zone.